All right. I think we're live. It is 6:31. It is October 3rd. My name is Scott Redler. I'm the Chief Strategic Officer of T3Live.com. This is a 6:30 club where I try and figure out how we can make some active cash flow, navigate these markets with a process and a plan, also figure out ways to prepare for the future, whether it's a 401k, a 403b, a 529, and then if you're actively approaching the market, how do you use an active account, a swing account, a box account, an option account, and try and connect all the dots and move forward. So cheers to you guys for tuning in. I wish this was old school way where I could talk to everybody and say hello to everyone, but at this point, I'm still trying to figure out the best platform to have the 6:30 club on so I could say hello to everyone. Let's see. So this doesn't let you interact with everybody the way we used to. But we'll figure that out. We always figure it out, right? Same way we always figure out what's next in this tape. We're in the fourth quarter now. The thing that scares me is that literally when I came into this year, I gave plan A and plan B, if I remember correctly. It's like you can go to right here, okay? Everyone was calling for a recession in the first half. Everyone was calling for them to cut rates at least 1 point. And then I remember right here is when the market said, that's not the case. Right here, this was the day. This was January 5th. The market went from maybe a bear flag, right, to go to the downside and test the October lows to, igniting. And that actually turned into a great move, all the way above the December highs. And then we had a higher low. And then, if you remember, finally, we took out 41.95, and this was probably one of the better trends of 2023 when you had Tesla going nuts, you had Nvidia going nuts, above the 21-day. So now here we are. Okay, it's a fourth quarter. We've just corrected a bit, right? We just came into a symmetrical area, right? 4186, 4200. If you look at the weekly chart, you'll see this was a spot. We hit the 200-day, but I don't know. It felt like there was a little fear that day, but nothing so crazy. But the action among sectors is very, very hard. They give you this false sense of security or not, and then they just break things fast. Everyone was talking about the utilities yesterday. The utilities are supposed to be kind of a safe place. You get some yield. I would say the majority of people that own them are people who are retired. And then you go to the XLI and or XLU, sorry. And look at that move. Holy cow, that's a big move in utilities, all the way to the downside. If you invest in utilities in the last 3 years, you're underwater. If you remember, every single person on TV was talking about the small caps and the equal weight. You got to get into that. That worked for like 4 weeks, and then it failed. If you look at the IWM, you look at this channel. All of a sudden, it came back to the highs. Looked like it was ready to go. Everyone gets all bullish. And then, you lose the 8-day, turn into this head and shoulders top, and boom, boom, boom. All of a sudden, you're down for the year in the small caps. And if you look at the past few years, it's done, a whole lot of nothing. Came right into this channel and then just failed, and it failed fast. So that's why when people say you cannot, you have one-way mentality, you can't. You have to have multiple plans because things change in a heartbeat. So now I guess you'll see what happens here. Does this 168-ish area hold, or does this really break down? And then, we were in this channel in the XLE where everybody was getting super duper 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 bullish. And I'm like, guys, this is the top of the 2-year channel. The same way the small caps look really good. You can't get overly excited here. So all of a sudden you get to the top end of this range, and 93.30, 94, 93. Looking like it's going to break above it, and then in 2 days, gets hit real fast. So all of a sudden, now who knows? Now we'll see, which this isn't the worst, but now we'll see what's next here. But this 91.54, if you're active, you needed to know that. If you were playing for a breakout above the 2-year channel, you had to get out right there. And then if you got out right there, if you flipped short, you made some fast money. But anyway, things go from looking pretty good to nasty fast. You remember, a month ago, Netflix was looking like it was ready to lead everything, right? And then all of a sudden, Netflix gave you a clue right here be careful, right? It had a move above this descending trend line, was flagging, looking like it would break above, fill the gap, and then that day happened. And if you didn't notice that day as a trader, you got absolutely crushed. And then if you were trying to buy this thing this entire time below the 8-day, all of a sudden finally yesterday it looked like it perked up a little bit, but still, there's not a whole lot going on here. Like maybe Netflix gets to this if this tech trade continues. And then you go to the Boeing side. I remember when we made a lot of money in the call spread. I was talking about a big breakout, in this channel, which happened, right? And then all of a sudden, if you didn't get out of the way at 235, okay, as an active trader, if you were playing for it to continue, and you didn't get out of the way fast, if you weren't thinking clearly, if you weren't, with your process and your plan, you could have got hurt right there and then fully annihilated. And if you've been trying Boeing this entire time, you probably got really hurt. I think I tried it twice. I lost a few $1,000s each time. But but if you're like, oh, it's Boeing, I'm going to cost average in, you're out of business. So now typically what happens is in this market, because it's so predatory, probably it's below this big range, getting everyone short, and then it's probably going to pop back above because it didn't hold here where it was supposed to. So what's Boeing doing today anyway? It's up 22 whole cents. It just shows you how hard the tape is, that if you're not as prepared and if you're not working on your routine, you're not working on your process, you're not getting things together as fast as possible, you could really get hurt in this tape. So it's like rules, process, plan, and multiple plans. Like say it 3 times, like lions and tigers and bears. Oh my! What movie was that? That's one of my favorite movies back in the day when I was a kid. But that's why I preach that. And some of my, the alpha team, including me, you get some paper cuts here and there because, every day is a little bit of a different day and you have to be really so precise. But again, it's just the threshold. You need the threshold to continue, okay, to keep going, and because, there will be better times with more continuity. Like everyone's like, oh, high beta tech's been so awesome. I'm like, okay, how awesome has high beta tech been where, it's Apple still kind of no man's land. It's not like you're having higher highs and higher lows. You had a red dog reversal here at 169.05, and chances are it's going to not get through here. You had a corrective phase in Microsoft, Google, and Amazon. It's not like those names are making 52-week highs. You could stay with them for multiple weeks. You're getting trades, little trades. Like if you got out of Microsoft here, okay, when this ascending channel broke, maybe you got involved, in this lower pivot, and now it looks like maybe it's on its way to 324. But we'll see. I will say there was a nice trade, a nice setup. We like setups, don't we? In NVIDIA. NVIDIA was a nice setup. NVIDIA triggered above this 427 spot, which was a spot that we were all watching. Some did it better than others. I feel like I could have done it better. Even yesterday, we were in the 630 club. I'm like, you think. Goldman Sachs put it on the conviction buy list. It's a new month. We traded through 441, and gave a great trade and hit a high of 451.75. And now we'll see what's next here, but you really can't do it by itself. Hard to get too excited. I think you could put AMD on what's it called on your game plan, but you got to make sure because this AMD has been rejected every single time at this downtrend. Okay, right? Since the double top up here has been rejected. If it can hold in here, you maybe even made this a little bigger and show some commitment to this nice move that we saw last week, which it was a nice move. Red dog reversal here. Got below 95.61, came back above. If it can go sideways here, you can keep this on the radar for perhaps a better move. If we're going to rally, if we get this fourth quarter move in some capacity whenever that happens, I would think that this area would be an area that if it finally, everyone who comes in short here gets squeezed and it starts a new trend of a low, a higher low, then gets through there. That's something that's on my radar. Just trying to find these setups. And then Tesla's been not special. Tesla was a great vehicle for all of us in May. This was when it was above the 8-day, gave us tradable moves all the way to this red dog reversal high at 299. I will say yesterday some guys did really well. I was not really a believer yesterday when it reclaimed 246. Deliveries came out. They looked a little softer. They threw a carrot out there saying, yeah, we're going to keep our deliveries for the year. So PS, it reclaimed 246, got rejected into Friday's high. So this is trying to, hang in there. If we're going to rally at the end of in this fourth quarter or whatever, if it's a big if, because to me, if the 10-year gets to 5.2, 5.4%, it's going to be really, really hard to rally. The problem is the market didn't believe the Fed all year. All year, I was like, Redler, do you think they're going to cut rates? I'm like, we're not cutting rates unless the market falls 10, 15, 20%. But like, hey, but the Fed doesn't watch the market. I'm like, that's bull sugar honey iced tea. So now they're saying the Fed's going to cut rates 1 point next year. Okay, they might. First, they have to get to where they want to go. Second, if they're going to start cutting, that means we have to start getting really, slowing data. And then the stock market has to probably correct 15, 20% to get sentiment so bad. So finally they start cutting. We're not anywhere near there. So we could be in this choppy, take your trades, be patient, don't break screens, trade for a while. Wouldn't that be fun? No. You better get in that sauna and cold plunge, do something fun for yourself. Otherwise, life is a little choppy. But anyway, Tesla right now is down 2. So this is something I watched today. If the market wants to kind of hang in there, maybe it builds in here and then at some point takes out this 254. Because if we're gonna have some kind of move, we're gonna need some kind of leaders besides just reversion to the mean type trades between all these different sectors. Talk about fake out moves. I feel bad for all the gold bugs out there. Gold was looking pretty good, looking like it was about to break out of this symmetrical triangle. Yeah, everybody was dancing around. The gold bugs were bugging. And all of a sudden, you have a breakout move that failed, which is distribution, which was clue 1. This is clue 2, and it broke in here. And then look at that. Just when it was going to look great, if you didn't get out, run for the hills, that happened. And, maybe I guess there could be a trade here, I guess, if wants to fill this gap at some point. But I would think every single person, including me, pointed out a big cup and handle pattern that failed fast. So they're not giving you these patterns that look good, and they're not. It's like sometimes patterns look good and they trigger and they go, and sometimes they're just pure-fledged fake outs. And this was a pretty big fake out here for gold. And then you have the asset allocators, right? They're in the little bonds, they're in some REITs, they're in some utilities, they're in some tech, they're in some gold, and every other day something's getting crushed. So I don't know. I'm not being like a commiserator here, but I'm just saying it hasn't been easy. So on TV they make it look easy. It's so easy. This is the easiest thing. Oh, this is the known thing. Oh, this is gonna. Meanwhile, it hasn't been that easy. And I've been doing this for 23, 25 years, and I've been like. My nickname's Red Dog. They should call me Red Hamster. Friggin' wheel going around and round and round and round and round, getting a little dizzy. But again, perspective. So what's going on today? Let's go back to the SPYs for a second. If you look at the weekly chart of the SPYs, we held where we had to, right? Held right on this trend line. Is it gonna, is this the September, October low? That's the question. Or are we gonna stay below this 431 to 433 and wind up undercutting this, going down to 418 or 407 or even 398? That's the question. Overall, though, we'll see. The action right now doesn't feel like this is going to be the spot, and I think sentiment is trying to talk too highly of a fourth quarter rally. So you need to make everyone think the fourth quarter rally is not going to be there, so then the computers could have one. That would probably be breaking 422, seeing 418, getting everyone negative, and then reclaiming it. But again, you can't think like counterproductive. Meanwhile, looking back, this was very methodical. Broke the ascending channel, head and shoulders top, head and shoulders bottom, moved to here, and then remember we broke 443, broke 440, kind of held what we had to. So let's go back to the daily chart real quick. So yesterday, to start the quarter wasn't, so easy. You had tech kind of strong, and then you had everything else getting sold. So you had this push-pull where can you have faith in tech that you could buy a dip when it looked like the SPYs were going to break below 425.91. and then retest 422. And then what happened in the last 45 minutes? It reclaimed it, and we just hung in there. Still below the 8-day, still below all the moving averages, still below the neckline of what, the head and shoulders pattern. So do we stay in here to continue to give one of those moves to 412, 418 to shake things up, or do we just hold in here and grind and continue? I don't know. That's why I'm on my toes. That's why I'm staying tactical, trying to keep everybody sane, in an insane world with friggin' Washington, with, 2 guys running for president, one senile, one's, indicted, both over 75 years old. I don't understand why we can't have, age limits. You have to be a certain age to become president. How about a certain age where you can't run for president? Or what about some kind of term limits for what's happening in Washington? But anyway, we're not getting into that. So for me, I try and approach every day. I'm tactical. I didn't really take many things long overnight. I have some leftover options. I'm just trying to figure it out, which there's been some things to do. Every day there's things to do if you just really wait for your signal. So for today, it's hard to tell. There's nothing that I really love. Maybe Tesla goes red to green. At this point in NVIDIA has been great, but are you going to buy it up today because it's up? It's already up 2. Could easily go, from red to green. It has some room to 455-ish. SMCI was up for a while. That probably can't be a buy today. The Qs are down 20 cents. SPYs are up a whole 9 cents this morning, so it's probably going to be choppy back and forth. It is only October 3rd. Historically, you get like a real bottom in October, somewhere around October 8th or October 15th. And the way things feel, where they're taking so many things out to the woodshed, are we going to have a whimper start of a fourth quarter move, or are we going to have, one more, kind of volatile situation where it affects, I don't know. All I know is if you look at no one knows. If they say they know, the chances are that they're lying to you. You can have multiple plans. So if this 10-year is going to get towards, the Fed said, for the last 3 to 6 months that it's going to be 5.4% in 2023 and 4.9 in 2024, something like that. And we're only at, it only hit what yesterday? 4.7. So if the market that tried not to, believe it and would call the Fed's bluff and the Fed's going to stay the course, chances are we're having more downside in equities. And I don't know if you guys saw Rick Santelli ranting and raving. I've been on with Rick for a while back in 2007, 2008. He's saying that 10 years can go to 12, 13%. That's a little, Jamie Dimon said 7%. That was extreme. So everyone's, I do like, everyone's starting to get extreme on one side, because then that means everyone's wrong, that we probably pull in and we just normalize. So the question I have in my head, besides being an active trader that trades for a living, that's trying to make cash flow, is, where are we at? We've been in a 2-year range, which you could see, like some people are like, oh, well, rates are only back to where we were 10 years ago, right? 10 years ago, we were in 2002, we were right in this zone. But then look what happened in 2006. We hit 5.2, and then we all know what happened with the financial crisis. Which I'm not saying we're gonna have another financial crisis, but look at this chart, by the way. Charts still could be, give you risk barometers everywhere. Remember the 8 and 21 that I teach you? Well, right here, rates said they're going higher, and it's been above the 8-day cents. So this is probably a likely spot. What is this? This is 5.3%. But anyway, you go back to the the SPYs, and you want to, and everyone's crying, but P.S. the SPYs, look where they are. This was the high. I haven't done this chart in a while. This is where we broke out in 2013. This was the pandemic. I put the blood in the street account to work here and here. So far, I just put one little tier here. I'd like to put another tier, but anyway. This could be a crucial spot, right? If just out of nowhere, I just thought about this for a second. What happens right there? Do we hold? So if you just look at, like, this is what I did, the monthly. So you could make a descending channel this way. So this is the lower end right here. So if this doesn't hold, I guess we'll see what happens. But again, so what's this line here? This is 402. This is 418. I'd love to see people like, if we're going to get a fourth quarter rally, what needs to hold? I would say this 418-ish needs to hold. Otherwise, it could be some trouble here, and then it can get loose and wide and, start to really break. As of right now, it's still just consolidating. So I'd love to be in the camp that, this is 2021, so we're consolidating a huge move that we saw over the pandemic move. We're going to go sideways. Then at some point in the next year to 2 years, we're going to take this out and make a new high. That could happen. Or they keep raising rates. They keep trying to normalize things. We just create this bigger channel. Look how long this channel was. This was a crazy channel back in the day. But if you accumulated the S&P cash for this decade, you got paid handsomely. Anyway, I'm just kind of blabbling here. What is the weekly chart? Weekly chart, look at that. We did this so many different times. Anyway, let's go back to what are we going to make money on today. Qs were strong yesterday. So this is actually the weekly chart on the Qs. Going sideways here. If it could hold above this area, we're in the lower end of the range. But we got to make sure that holds. The daily chart right here, yesterday was stronger. So some people are saying, well, they're going to get to tech. Well, sometimes they say, to try and simplify it, can't get too bearish if 357 holds. And then the bulls can't get too nice, or we can get momentum unless we get above here. So right now we'll see how many days we're going to go in here. Some guys like, hey, Red Dog, is this an inverted head and shoulders pattern in the Qs? Which, if we go to that short term, which these are all different time frames, you go to see the 5-minute. Is it inverted? Not really. Let me go to the 15-minute. Yeah, you could say that. So they're pointing to this. They're saying, okay, here's your left shoulder. Here's your, you kind of like your head. God. This is Trend Spider. Sometimes it's a little sticky. Here's the head. I'm doing this real fast. Here's potentially the right shoulder. And then this is your neckline. So in order for, this left shoulder, head, right shoulder to trigger a bigger move, get above and stay above that. And usually the measured move is like 351 to 362, and that probably brings you back towards the resistance. So are we going to fill this void here in the next few days? I guess we'll see what happens with some of the economic news. Or is this kind of continue down? I don't know. Right now, the Qs are down 26 cents. SPYs are up 8 cents. Nvidia's up 260. This is down $1.70. Apple's down 40 cents. Microsoft's down 65 cents, but Meta's up $1.30. So this. So just chill out. Chill out. Let the trade come to you. If there's no trade coming to you, don't force it. And there will be a time when sometimes everything kind of gets a little bit more continuity, and you could put some money to work and trust it. I feel like I haven't put, I have an active account, a swing account, a box account, and an option account, 4 accounts, and I feel like it's been, since 2021, it's been in 95% cash, and I've just been tactical. There's been a few sequences that have worked very well, but there hasn't been that many of them. So if you feel like you're just like waiting like a panther in the brush, continue to wait there. Just don't fall asleep. And then some lion attacks you. Anyway, I'm babbling. Red Dog's babbling this morning, and it's only Tuesday. I can't believe I'm babbling on a Tuesday. It happens. So that being said, it's just the Qs are where the relative strength is. Can it do it by itself? It's going to be. I would think it's going to be hard. You look at J.P. Morgan yesterday. I pointed out this bearish candle from Friday. So if the banks are going to, the bears are going to growl, J.P. Morgan's going to break this spot. With rates so high, you haven't heard everyone rumbling about the regional banks. The regional banks look horrible. About to make a low from the peak of July 27th. Could fall apart here. Charles Schwab also, just broke below this spot. Are below the 8 and 21 day, there really isn't that much to hang your hat on. So until there is, just keep your powder dry, keep your brain sane, work on your process, control what you can control. They say you can make, I was listening to one of these pep talk things, and it's like, it's not the conditions, it's the decisions to the conditions. You can't control the conditions out there, but how you approach the conditions with your decisions is what keeps you sane, safe, and hopefully profitable. Thanks for tuning in, and we'll figure out what happens here the rest of the week. Good luck, guys.